Is the Emperor prepared to enter? Thank you. Please enter, Emperor Palpatine.
Hello there. Well, it appears we have entered a galactic civil war. I have called this press conference to announce that we will fund the production of clones.
But Chancellor Palpatine, how will we track the money?
Good question. It's not something the Jedi would tell you. The money in the banks will be seen on the Loanable funds graph, while the money on hand will be seen in the money market graph. As you can see, the Loanable funds graph showing supply and demand relative to real interest rates and the quantity of money. And here is the money market graph depicting the money supply and money demanded relative to nominal interest rates and the quantity of money.
Chancellor Palpatine, what's the difference between the interest rates on these graphs?
Well, real interest rates accounts for inflation, while nominal interest rates is the actual amount of interest that is being paid.
But what is used for fiscal and monetary policy?
The Loanable funds graph shows the borrowing of money in fiscal policy, while the money market graph shows the shifts in the money supply caused by monetary policy. The demand for loanable funds is shifted by the amount of money borrowed, rather than the money on hand in the money market graph. The supply for loanable funds is shifted by the amount being saved by the government, businesses, etc. But for the money market graph, it is shifted by monetary policy.
What about the droid attack on the Wookiees?
Oh, that's a loanable fund shift. That would be an increase in money borrowed to support them with clones, increasing real interest rates and the quantity of money.
But what if we don't trust the Trade Federation banking clan with our credits?
That too would cause a shift. That would be a decrease in the money saved in banks, decreasing supply, lowering the quantity of money in the bank, and raising real interest rates.
But what if prices on Coruscant fall?
Well, that would shift the money market graph. The money demanded would increase, which causes nominal interest rates to increase.
But what if the reserve requirement is lowered for the Trade Federation banking clan?
Well, then the money supply increases, resulting in nominal interest rates to drop and the quantity to increase.
You've been talking a lot about interest rates. How do they affect things?
Businesses, or interest-sensitive spending, will decrease investment if interest rates become too high. This would decrease aggregate demand. However, foreign financial investors will increase the demand for our currency if interest rates rise, because they could then receive greater profit.
So as interest rates increase, the money that businesses are willing to borrow to invest decreases?
Ironic. In fact, you can see this relationship on the investment demand graph. It shows the demand of money by businesses as the real interest rates and the quantity of money changes. Businesses often worry about the expected rate of return, the measure of profit from investment, which is expressed as a percentage of the investment's cost.
Thank you for explaining how we track our money, but I have one more question for you. How are you going to get the Senate to approve such a financial endeavor?
I am the Senate.
Wait a minute! Are you the Sith Lord the Jedi have been looking for?
It's treason then.